stocks continue to wobble around amidst mixed global cues. Financials managed some gains while consumer durables and autos drag.
Nykaa gains despite sale of shares by IPO investors. A strong demand ensures only a small discount to market price, but SoftBank's woes cast a fresh shadow of uncertainty on several digital names.
A spike in COVID cases in China sparks fresh demand fears, even as easing geopolitical tensions raise hopes of easing energy supplies, hurting crude.
Big revelations of money diversion at FTX prompts comparisons to Enron, even as Twitter shuts out employees from office again amid reports of mounting resignations.
Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Mangalam Malu today. Well, it's turning out to be a session where we are definitely seeing some amount of pressure on our markets. Let's see whether or not there would be a second half recovery or not. But as of now, we have the mid-cap index, which is down around 0.7%, the Bank Nifty, which is down around 0.4%. As we move closer towards the end of the year, there will be lesser amount of news cues to reckon with. So maybe the street will now be concentrating on the next big event, which would be the RBI policy in the first week of December. As of now, the Bank Nifty just about being more resilient as compared to the mid-cap index as well as the Nifty. We have a couple of stocks such as Axis as well as Kotak from the Nifty Bank constituents, which are managing to hold their head above the water. Hi, Mangalam.
Hi, Ekta. Yes, it is a down day in today's trading session, but nothing really to worry about because we have been in this range of 18,200 to about 18,500 for the last few trading sessions, and incrementally we keep testing the borders of each of these ranges, and currently at the low point of trade for the index. Let's see what happens in the second half of trade, whether this gets bought into or not. And like you said, as we move towards the end of this year, we probably have lower news, but at the same time, lesser news and lesser volume amount to bigger volatility in the way these stock prices move. The two macro data points which are doing extremely well from a global standpoint, one, oil is at around 90 and the dollar index is stable. So long as that happens, perhaps nothing really to worry about. VIX just under 15. Nothing to worry about as well. Let's see where we go.
Yes, absolutely. Well, let's get talking about a couple of companies on our radar this morning then. We have Wockhardt, which is the first corporate on our show this in the next 1 hour odd. Report suggests that the company's antibiotic, which is under study, WCK5222, is in fact showing some amount of success. To talk more about this as well as the business outlook, we have with us Habil Kharakiwala, the chairman at Wockhardt, who joins in now. Mr. Kharakiwala, good to see you after a very long time. Well, it was an interesting incident that took place where WCK5222, which is your antibiotic under development, was used on a lady from Nepal, we understand, who had come to India, and she, unfortunately, her surgery resulted in quite a steep infection. And WCK5222, we understand, was used successfully in order to cure the infection. Can you just give us more details in terms of that particular incident, and what is the kind of traction you might be seeing from the doctor community post this particular incident?
See, this drug is under phase 3 clinical trial, WCK5222. And there is also provision in India and worldwide, in US, Europe, everywhere. Okay, if the patient is a very, very serious one, and in the opinion of the treating physician, drug which is under clinical trial can be used for compassionate purpose. And for this, for every patient, you require a specific permission. The patient and the doctor has to get it from the drug controller of India. And then we supply the drug, and normally and always in a compassionate use, the drug is supplied free of cost. So it is never a commercial idea. It is fundamentally to save lives. And this typical patient was tried almost all the drug available and worldwide which were approved. For over 4 weeks, she was on ventilator. And after this drug, our 5222 was given, she was off ventilator in 3rd or 4th day, and she was left the hospital in 10 days. After that, also, doctor followed the patient for next 4 or 5 weeks. And when everything was absolutely normal, then the patient went back. So this is what it is. It is under clinical trial. Some of the trial has already begun in Europe, and it is going to start in India and other countries.
Okay, so these are phase 3 global clinical trials which WCK-5222 is currently undergoing, we understand. When will the final data be released on it?
We expect the clinical trial to get over by end of next year or early 2004. And then we would be submitting our application to regulators in US, Europe, India, elsewhere. And we hope sometime in later part of 24, early 25, the drug should be available.
Okay. What is the monetization opportunity, Mr. Khurakiwala? Before I pass it on to Mangalam, I just wanted to understand from WCK-5222, it is in global phase 3 trials currently. There is data indicative of the fact that there is some amount of efficacy in this. Can you just give us a sense in terms of whether or not this would possibly be a licensing opportunity? Are you in talks with partners?
Yeah, see, there are two approaches we have. As far as India is concerned, we will definitely market here in India. And we have not taken a position as far as the US is concerned, whether to do it ourselves or license it to a third party. But rest of the world where we do not have any organization, we are definitely going to license. China, Europe, rest of the world. So that is where we have a great licensing opportunity available in most part of the world and maybe also in the United States.
All right, we take that point. But I'll just take the monetization part forward, Mr. Khurakiwala, and expand it to the company. About a month ago, there were reports that, Wockhardt may sell its domestic business for about 2,000 odd crores as a part of a rejig. Just wanted to know whether there is truth to that or these are just news reports.
I think it is just news reports.
So you're not looking to sell your domestic business currently?
I don't think we have anything which is happening.
Okay.
Would result into something like that. And if, as and when, if there is some significant thing is happening, we will certainly communicate to media.
Right. No, because you do have some debt on your books. Just wanted to know that what is the debt repayment plan? I mean, how do you plan to go about it?
We had a debt of about $250 million in our Wockhardt Bio. The last 2-3 years, today it is zero. So we have paid complete debt. As far as India is concerned, most of the debt which we had taken from the bank long term is small debt is remaining, and it will get paid. It's about 100 odd crores or less. It is remaining. It will get paid in by end of the financial year.
Okay.
Then we have short-term debts, which I think we will deal with it over a period of time.
Okay, Mr. Khurakiwala, yeah, go ahead.
We are also trying to restructure or deal with some of this thing for funding our R&D program also.
Okay. Mr. Khurakiwala, I just wanted to come back to WCK-5222 and probably tie it with the US markets, because currently you have a consent decree which is signed for the US markets. You're operating via third parties. If in case you do want to enter the US markets and commercialize WCK-5222, would it have to be via a third party, and hence you will probably look to out-license this molecule in terms of manufacturing to a manufacturing partner and then probably accrue royalties and milestones from it, just to understand the model?
Let me explain to you. We have decided to close down our manufacturing facility at Chicago Morton Grove, and that was purely a business decision to save the cost and improve profitability. As a part of our process, we signed a consent decree that when we start, we will take a prior permission of FDA. So that is, we are dealing with generic product. Now coming to WCK-5222, we are getting the whole product manufactured in UK with all FDA approved facility. So it is totally not disconnected as far as because we are already manufacturing, the product is already in clinical trial, and whenever it is getting approved, none of VOCAT facilities involved, and all facility which are involved are US FDA approved facility. So these two issues are totally delinked. So this has nothing to do, for example, of whatever business decision we will take for WCK 5222 in terms of monetization. Anyway, we are doing a worldwide basis. And even if we decide on the USA, either we monetize or we market, the situation doesn't change because this product will be manufactured in third-party facility which are located in Europe, and they are all FDA, MHRA approved facilities.
Right. Just a two-part question. One is on the tie-up that you had with Serum for manufacture of vaccines. I mean, what's the status of that? Where have you reached? And, for COVID in particular, I think the demand for vaccines has dropped substantially. And the second one is, because you're talking about the US business, just wanted to know the US FDA status of all your plants right now.
Let me answer second question first. As far as the pharmaceutical is concerned, we have not having any products getting manufactured in VOCAT for US FDA. And we have taken a business call that if whatever product we have in the market, we will get it manufactured by third party. At the same time, we are sending out a closer letter to FDA for complete compliance. So that is there. Now, coming to your first question about the vaccine manufacturing with Serum Institute, let me tell you, this vaccine which we will be manufacturing is not necessarily only COVID or future COVID vaccine. We have identified, along with Serum, 6 vaccines, which they already are manufacturing here in India. And that is where we would be manufacturing for them. In UK, our contract with them is for a 15-year period, and which is a 51-49 profit sharing plus whatever is my manufacturing cost.
Sure.
Would be there. And we are in a process of executing the same.
And how much are you now manufacturing when it comes to AstraZeneca and the tie-up that you have with the UK government?
At the moment, I think they have enough inventories and there is no manufacturing last few months.
Okay. Okay, all right, Mr. Kharakiwala, it's a pleasure. We'll touch base with you again. Thank you very much for joining in and speaking with us. So that is Wockhardt. There is definitely some amount of success which has been possibly shown in one case when it comes to WCK 5222, but remember that particular drug is still under trial. It is an antibiotic which is used to tackle superbugs, basically infections which are even resilient to ICU antibiotics. We'll take a short break. We'll get you more on the markets as well as stock-specific action on the other side. Stay tuned.
Welcome back. All through this month, the markets have gone one way while the PSU banks have gone another. They've just been gaining from strength to strength. This month itself, that index is up almost 10%. This year, up almost 50-odd%. There is a case for, narrowing valuations between their private counterparts and the public sector banks. And now we are getting some incremental positive news that the government has made an amendment to nationalized bank schemes 1970. According to this policy, the appointment of whole-time directors and MDs will initially be for 5 years and then can be extended for another 5 years. What does this mean? Stability at the top? Sapna joins in with what she's picking up. Sapna.
Hi. So basically, a couple of views from government sources. Of course, the first fact is that, the principal extension of tenure up to 10 years. Now, this is an established thing for the PSBs. For the nationalized banks, at least, it can become a precedent, so to speak. However, it has not been done in terms of the SBI management. Obviously, that is an act. Here it's a scheme. That, of course, is a technicality. But what we are able to understand is that there is no similar requirement, probably, from the SBI management, so to speak. Government, of course, will be open and will consider if any such similar proposal or similar demand comes in, because as I just mentioned, this could become a precedent. That's one. Second, there is an absolute urgency in terms of the public sector bank management for this extension to have happened. Because what we are going to understand is that there are a lot of executive directors in nationalized banks right now who are kind of close to the retirement ages because, they became ED sometime in their 40s. They're nudging somewhere in the 50s, and the government is very clear. They don't want to lose this talent pool. So I think more in terms of, rather than the CEOs themselves, I think it's also the second, top rung that they're looking at, the EDs, which are very, very valuable for them at the moment. And basically to incorporate and accommodate this talent pool, the government has, come out with this extension, so to speak. Also, the fact remains that, the provision for the extension, as I just mentioned, is in the scheme, not in the act. The view, of course, in the market is very clear that this is good news with respect to longevity of top brass in the bank. This can enhance operational efficiency and better accountability will lead to more confidence within investors. So this is the position as of now, but as I just mentioned, if need be at some point in time, if a similar demand comes from SBI, the government will be happy to look at it.
Okay, all right, Sapna, thanks very much for that. So that's on the entire PSU banking space. And I was just noticing a couple of them. Bank of Maharashtra, for example, from the broader markets is showing a cool gain of close to 9% at this point in time. It's done really well this year. It's up around 30% on a year-to-date basis, gaining over 20% just in this month. So Bank of Maharashtra in focus, even IOB up around 6%. But Nykaa is also in focus today. This is after there was around 5.4 crore shares which changed hands in a large trade in a block deal window this morning. Vivek Iyer is here with the details on this. Vivek.
Well, that's right. So it was a long-awaited, block deal, given the fact that multiple sources were indicating that there was quite a bit of a supply pressure, especially in terms of some of these newer listings once the lock-in period actually got over. So earlier today, we had indicated that in this particular name, in Nykaa, TPG Capital was looking to sell close to its 1.9% stake that it held in the company. So that valued the entire stake at close to 1,000 crore rupees, and it was expected to happen, at a 0.6% discount to yesterday's closing price. So along expected lines, the entire block deal took place, and it happened in the block deal window. And market participants now believe that supply pressure from this particular seller is now over, which is why you're seeing quite a bit of a bounce back as far as the share price is concerned. Now, interestingly, Nykaa has seen a whole host of block deals once this lock-in period has gotten done. Yesterday, an interesting buyer, Canadian Pension Plan Investment Board, actually bought 1.7 crore shares yesterday, and this again was reported in the bulk deal that the BSE published late last evening.
All right, thanks a lot for that, Vivek. The other stock which is doing well in today's trading session is NMDC after Kotak Institutional Equities has upgraded the stock to buy. Nigel joins in with more on that. Nigel, the stock at the high point of trade.
Well, that's right. NMDC is doing well in today's trading session. Kotak has gone ahead. They have upgraded the stock to buy with a target price of around 130 rupees. They acknowledge the fact that, yes, the management has gone ahead and cut prices yesterday. But they say that from here on, they're expecting prices to base out, not just in the domestic market, but in the international market as well. So they see that both, pricing of iron ore globally has an upside for the next 6 to around 12 months on. In addition to that, they say that NMDC has a strong case for re-rating post the demerger of the steel plant. Why is that? Because now capital allocation will be far better. Remember, they allocated close to 20,000 crores for the steel plant. They're expecting free cash flows to improve from here on, and if they're going to generate more amount of money, well, they'll be capable of paying more amount of dividends, so a higher dividend yield is possible as well. Put all this together, the stock is bouncing back today.
Okay, all right, Nigel. Thanks very much for that. That's on NMDC. The stock is up around 4%. Time for a break now. But up next, Technicals Aditya Agarwal will join in to discuss some of his trading strategies.
Well, the Nifty is down 100 odd points right now as we speak, 18,250 thereabouts where we are, but it's still behaving and meandering around the range that options are active at. So if you just take a look at the F&O setup at midday, it's interesting. The theme that seems to be playing out, Ekta, is that the option writers are selling the 18,300 call and put. So put together, they would pocket a premium of almost 220 odd rupees. The 18,300 call extremely active, 18,300 put equally active. They would want the market to expire around that 18,300 mark itself. But they're not taking any risks because next week is the November series expiry. So what they're doing is they're also, to protect themselves, buying the 18,200 put and buying the 18,400 call. So both of them are also equally active. So what does this mean? On a net basis, by selling the 18,300 put and the 18,300 call, they're pocketing 220 rupees. And to protect themselves, while they're buying the 18,200 put and the 18,400 call, they're shelling out 130 rupees. So net pocketing almost 100 odd rupees in terms of premium, and hoping that the market expires between that 18,200 to 18,400 levels in the next 1 week itself. So this strategy, I mean, from a technical standpoint, if I had to confuse people, would be called the iron condor strategy. But no, we're not doing that. What we're trying to say is that they're just trying to hedge themselves and exploiting the benefits of the prices which are available at the 18,300 call put, and diversifying their risks. Well, does that tie in with the technicals or not?
Yes, absolutely. So in fact, we have Aditya Agarwal joining in to discuss the technicals of the market. Aditya, so Mangalam is, based on his analysis of the F&O market, 18,200 to 18,400 would probably be the range going into next week as well. What is your sense? What are you probably estimating as a range for the Nifty, as well as what are the stocks that you would probably be recommending?
Hi, Ekta and Mangalam. Thanks for having the show. Good afternoon to all the viewers. So yes, absolutely. Mangalam has put it out there, everything. 18,400, 450 has been acting as a resistance for some time now. And if we take a look at the movement of the markets in the past two trading sessions, clearly bulls haven't been able to successfully take that out, which has led to a decent correction in trade today. But again, on the downside, as Mangalam also pointed out, 18,200 is your immediate support. From there, we are trying to bounce back in trade today. If that is broken, maybe 18,100 is the maximum downside that I see at the moment in the markets. So there is a bit of a profit booking, you can say, Ekta, and plus a consolidation which is going on while your US markets could continue to outperform. My sense is Indian markets could enter into this lull phase at least for a week or so, while your broader markets could start picking up activity which has actually underperformed in the past couple of weeks. So stock-specific activity and maybe a switch from one sector to the other could happen, while your markets could remain range-bound, both the Nifty and the Bank Nifty.
Okay, if the market remains range-bound, would it be more prudent then to play individual stocks? What do you have on your list?
Absolutely, Mangalam. So city gas distribution stocks are something which are buzzing around for some time now. If I have to pick one, maybe MGL is something which is looking very attractive on the charts. It has broken out from a narrow consolidation. On a day like this, it's still up trading in the green. So on the upside, a target could be 925, put a stop loss at 875 on the downside. The second stock recommendation is Birlasoft. Again, this stock went into a massive corrective phase, and from there, it's now trying to make a base and break out from that. So on the upside, 296 will be the target. On the downside, 271 will be the stop loss.
Okay, all right, Aditya, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So some news coming in on the telecom space. Reliance Industries says that Jio 5G is now available across more geographies across India. So it's across Delhi and NCR where Jio 5G is now available. Standard Disclosure is the owner of the channel that you're watching. We need to take a short break, but up next, we'll be talking to the management of Uflex on their Q2 performance. Stay tuned.
Welcome back. Let's talk about Uflex. That's the stock on our radar, up almost 25% this year. The company reported a mixed set of earnings for the second quarter. On the one hand, while revenues were up 24%, the volumes were down 3%, and the EBITDA was lower as well, as a result of which the margins compressed from almost 14% to just about 11%. But importantly, they do have a fair amount of CapEx coming on stream. What does that mean for their business going forward? We have Rajesh Bhatia, who's the Group President Finance and Accounts of the company, joining in. Thanks a lot, Rajesh, for joining in. The first question is obviously what the current BOPP, BOPET spreads are, how they've moved versus the second quarter, and going forward, what's your assessment of how margins will pan out? Because you had a target of 17 to 18% for the whole year, And for the first half, you've done just about 14.5%.
True, you're right. And that is basically because the Q2 we've seen, the Europe has really, has been sort of a dampener because of the high energy prices over there. So we had a situation where, the energy costs there are up for us in Hungary by about 150%, about 50% in Poland, just because Poland we had a little longer tie-up. So the energy costs are playing a havoc. And also the demand side in the Europe is in the last quarter got affected as the consumers had to spend more for their energy bills. So obviously some of the discretionary spend is what where it gets compensated. I think that's been the order of the day. India, we saw one or two capacities coming on stream, which pushed down the prices, and as well as a lot of exports was happening from India to Europe as well. So which also got curtailed. So the domestic availability increased a bit. So on the film side, yes, the margins did take a beating. But the other sectors for us, which compensated more than that dip, are aseptic packaging as well as the flexible packaging. And aseptic packaging has done about 150% year-on-year growth in the net revenues. We have the core business, which is aseptic, which is the flexible packaging. So that has done about 28% higher revenues, and the margins there in those segments are also good, which ultimately led to a blended margin of a little over 14%. We on a demand side and on the margins coming back to the normal, I think.
Mr. Bhatia, I just want to interrupt you and ask you a little more specifically when it comes to demand, because you spoke about the aseptic packaging segment, and that's done fantastically well for you. Like you mentioned, over 100% year on year in terms of volumes as well as revenue. What led to this demand, and are you possibly seeing it sustain?
So on the aseptic side, I think this is sustainable because it was the first time that we are really focusing on export markets. And that has ensured that, even in a lean India season, which normally starts end of July or the middle of August, we are able to keep up the tempo because the exports are, in fact, this quarter we had the highest ever quarterly exports in the history of UFlex, led by our chemicals as well as our aseptic packaging exports. So those are keeping our plants at a full utilization levels. So that's a very good development, because if we are able to keep those things intact, that will mean that, when the India market goes lean in the off season, that will be compensated by exports, and throughout the year you will be able to run your plants at almost full efficiencies.
Right. At the halfway mark, we're looking at 7,800 crores on the top line for you, little over 3 lakh tons in terms of volumes, and 14.5% margins. Just wanted to know what your targets for the full year are, and in line with what you had given earlier, 12 to 13,000 crores in terms of top line growth is what you had guided for this year, with 17 to 18% margins. Now with demand from Europe being under pressure, costs increasing, etc., where does that guidance stand at?
So I think in terms of top line, based on the H1, we can look at somewhere around 15,000 crores, driven by the fact that Q4 for the aseptic, we are likely to see a substantial increase in revenues over there. So we are looking at from a run rate of about 600 million packs a month to close to about 750 to 800 million packs a month from January. So the flexible packaging business also looks to be good. And that has various subsets also, like holographic, like engineering, chemicals. So all of that as of now is doing exceedingly well. In fact, the chemical business...
And margins, sir? Margins?
Margins blended, we still hope that we can complete do about 16% for the year as a whole.
Okay, lots more questions, but we've completely run out of time, so we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's the management of Uflex. Yes, Europe has been a tough geography for them in terms of margins, but they're definitely seeing demand in their aseptic packaging segment, which is done quite well in Q2. Well, we need to take a short break, but on the other side, I'll be talking about a whole host of pharmaceutical stocks which are in the news. Welcome back. Well, there are a lot of pharmaceutical stocks which are in focus, and in fact, Strides on your radar as well. They've received a US FDA nod for a particular drug, potassium chloride oral solution. Definitely positive for their US business, because in Q2, their US business did better than expectations. So that stock is in focus as well. $250 million is what they're targeting in terms of US business guidance for FY23. But nonetheless, let's move on. There are a lot of other pharmaceutical stocks in focus. Fortis, I'll start from the healthcare space, where SEBI has advised them to proceed with the open offer after obtaining an appropriate order from the Delhi High Court. And IHH is now obtaining legal advice on the next steps. They have reaffirmed their commitment to investors and the India healthcare sector. And that's possibly one of the reasons why you're seeing the stock hold up with a gain of around 2%. Glenmark Pharma, they held their investor day along with Glenmark Life yesterday. And the reason the stock is corrected is because there was no big bang announcement from it. They have a long-term guidance in place. So they're saying double-digit revenue growth over the next 4 years, continuous improvement in EBITDA for Glenmark Life, which is the API arm. The company guidance is mid-teen growth, contract development and manufacturing to double by 2027, stable margins, stable cash flows. So there's nothing really near term which the street can probably work with. And that's probably where you're seeing a bit of a disappointment on both these counters. Sun Pharma, the US FDA has approved a drug called Seza-B, which is basically a drug used for treatment of neonatal seizures. It is the first and only product for neonatal seizures in term and preterm infants. It is expected to be available in the US by Q4. It is a drug which was licensed by Spark from Sun Pharma. Hence, they are eligible to receive milestone payments. There was a licensing agreement between the two companies. Bajaj Healthcare, their API facility, there was a pre-approval inspection which had taken place by the US FDA, inspection between the 14th to 17th November, and zero observations from the US FDA. Hence, that stock is holding up with a gain of around 4%. And lastly, Aurobindo Pharma, approval for an injection, which is amphotericin B-lipsome injection. Remember that it became very popular in terms of a drug during COVID because it was used to treat black fungus. So the approval is via their injectable arm, Eugia, and the product is expected to be launched in Q3. Eugia will be marketing the drug and they will not be manufacturing it, but nonetheless, that stock is in focus on account of that. All
right, so I'll let you take that breath, Ekta, right now. In fact, we'll take a breather as well on the show. Come back on the other side. We'll take a breather from the equity markets as well, because Manisha Gupta, as always, joins in with all things commodities. Right, in the midst of talking about what our weekend plans are, we have Manisha Gupta, who's in the studio now with us. Manisha, tell us about the commodities and then your weekend.
Weekend first. Can I do that?
Okay, go ahead.
Okay. No, but Kunal Shah is joining us. Let's not make him wait. Kunal, hi. And, I want to talk about the crude oil prices. If you're thinking about driving over this weekend, with the kind of decline that we've seen in crude prices, clearly is good news for India as a consuming country here. We have come down from nearly $100 a barrel to $90 a barrel in a matter of perhaps 10 days. How do you see, one, this kind of a decline coming in? How much of speculative positions have you seen unwind because of this? And what's your sense going forward?
Okay, so right now there are demand concerns from China. Chinese economy is slowing down quite rapidly in last 1 month. So Chinese demand has gone down by almost 6 lakh barrels. And if you see the global demand and supply of oil, after even OPEC announced 2 million barrels of production cuts, the oil markets are still in surplus. So I believe that OPEC Plus will continue with its rhetoric of more production cuts going forward, which would eventually lead to some support in oil prices. But $78 seems to be the floor in short term for the WTI. Already we are at the verge of oil breaking to $80, and I think it may break. And because of that, we are going to see some more decline on MCX also. So still not very optimistic, but I think it should take a halt at $78.
So another couple of dollars down, or rather $4 down from these current levels is what you're expecting. Kunal, the whole conversation rhetoric about the European Union putting a ban on Russian oil from 5th of December, we being into a winter season demand period, do you think those factors would support somewhere?
So if you see whatever news apart from the China's demand slowdown, whichever the news, so there are two things. One is this, and another is Russian oil price cap. So these two news are sentimentally, slightly bearish. But I don't see oil prices are going to crash. Looking at the way whatever is happening across the world, we have seen a meaningful correction right now. But I'm not expecting it to crash. If it does, good news. But I'm not expecting a major crash from here.
Before the month of November started and we were looking at a dipstick survey of the rest of this month, that is a couple of months then, and most banks told us that 90 to 110 is the range that you could be looking at for the crude prices. We are clearly at the lower side of the range now. What are the risk-reward ratios that you see from here on until the end of this year?
See, what changed after that OPEC announcement of production cut is U.S. oil production. U.S. oil production has almost moved up by 90,000 barrels, so almost 1 lakh barrel after that, and it's ramping up quite fastly. All the basins in U.S. are producing. Shale oil production is shooting up. So next year, U.S. shale oil production is expected to touch another high, somewhere at 13 million barrels is what I'm expecting. So this is what has changed right now. But I think a floor should be, strong floor is expected to be at $78.
All right. Kunal, what's your sense also on the natural gas prices? Because there has been a profit taking onto this one as well. The inventories, whether it's about US or Europe, are comfortable as of now. The volatility, of course, continues to be quite strong here. But given the fact that we are looking at a colder season forecast going on from here, do you see supports coming here?
Yeah, as of now, the cold is moderate in US, but if the winter season, if we are seeing the more cold, I think natural gas will shoot up. So even though recently there has been a lull, but the fundamental of gas is still not bearish, and there is odd that if the weather conditions are extreme over there, natural gas can again shoot up and test levels of 560 to 570 on MCX.
Kunal, one final question, and of course, a $10 of a move in last 10 days on crude is quite on the higher side. Given the fact that we are getting into a festive season soon, it is almost after 15th of December that you see a very low lull, less liquid markets coming in. So for the next 1 month, essentially, how would you look at the prices move? What is that you think the speculative moves would be on what side?
Like I said, 78 should be the floor for oil, and on the upside, $87 to $88. So this is the range I'm expecting. If oil goes down below $80 and test 78, I think that will be the time to accumulate it.
All right.
And around $85, $86 book your profits.
Okay, all right, Kunal, as well as Manisha, thanks very much for joining in and taking us through your entire commodity setup, and wish you a good weekend as well. For our markets, it's a bit sluggish. We have recovered from the day's low. The Nifty is currently at around 18,256. We have the mid-cap index, which is down around over 140 odd points. We need to wrap up on the show, but stay tuned. Business Lunch will take all the action forward.